Welcome to reopened FXD1 2016-10, a fixed coupon bond that pays you your coupons at competitive interest rate of 15.039% each year in February and August. This investment is comparable to a money market fund that pays you a yield of 17% because of its saving on withholding tax at the rate of 5%, because a fixed coupon bond was issued for a maturity period of 10 years, attracting a withholding tax rate of 10%. Welcome to the details of this reopening after 3 seconds short break, and meanwhile give a thumbs up to this video, share it widely and engage us in the comment section. And if you are new to the channel, don't forget to subscribe, and because this channel gives you value-packed information, don't forget to hit the notification button so that when we upload the next video, YouTube will notify you. Welcome to FXD1 2016-10. Welcome back, and let's look at the details of this reopened fixed coupon bond. The first thing to look at, as usual, is the naming of this bond, that is FXD1 2016-10. FXD1 means that this is a coupon bond that is being reopened for the first time. The second part, that is 2016, that gives us the original date or the original year when this bond was first issued. And the third part, that is 10, that numeral number gives us the maturity, the horizon, the tenure of this bond. Consequently, it means that if this bond was issued in 2016 and for a 10-year period, then it matures in August 2026. And therefore, when you look at today, 2024, it only means that then this bond has a remaining period of 1.8 years for our investment. So when you are putting your money in this investment today or for this auction, then this will be a short to medium term investment of 1.8 years. The next important thing that we need to look at is taxation. This being a fixed coupon bond, in general, fixed coupon bonds are taxed at withholding rate of 15%, just like money market funds or any other qualifying interest income. A concession is given for fixed coupon bonds that have a maturity period of 10 or more years. They are tracked a withholding tax of 10%, and therefore for this one we shall enjoy a tax saving of 5% because of the tenure of this bond, because when we are purchasing a reopened bond, we buy this bond in their original bond terms. That makes this investment compare to money market funds that are currently paying us a return of up to 17% because of that saving on tax. Above that, bonds pay us fixed incomes or fixed coupons, and because money market funds vary their returns depending on varying or volatility of the Treasury bill rates, then because of the prevailing factors, this could be a good investment during this time, especially when the federal government has reduced its interest rate, which to us means that we could experience a demand-pushed reduction in market interest rates when foreign investments troll or start trolling into our local markets. The third thing to look at is the bidding period or the selling period of this bond. This bond has been opened from 25th September to close, or the bidding period will close on 9th October this year. That marks our bidding period. You'll be able to open your DAO CSD account, place your bid anytime during that period up to 9th October 10 a.m. that is when the bidding close, because in the afternoon on 9th Wednesday, October, that is when the auction will be taking place. Once the bidding period closes, it opens into the payment period. So on Friday 11th October, that will mark the day when the auction results shall be relayed to our through our transaction tab in the CSD accounts or our registered mobile numbers. That information will include your payment reference number, the 8 alphanumeric number that you will require, together with the amount that you'll be required to pay, and your CSD account number for payment. Once you have those details, you will have up to Monday, the 11th October, to make sure that you have wired your payment to CBK for your investment. That means that the value date for this investment shall be 14th October 2024, the same day when those investments or the bonds shall be pushed to the secondary market for trading. Another important thing as a detail is the accrued interest on this bond. That would require two important details. And one is the last coupon payment date. This bond paid its last coupon on 16th August this year. The value date shall be 14th of October. The period in between means that from the time the last coupon was paid, this bond has been accruing interest on a daily basis, accumulating 59 days. If you gather the number of days between 16th of August 2024 when the last coupon was paid and the 14th of September 2024 when the payment for these investments shall close, or rather the value date, that gives us a window or a period of 59 days on which interest has been accumulating. From the details as per the prospectus, the accrued interest has been valued at 2.3137, which shall be added to the clean price out of the market average rate that will be determined out of the auction to get the dirty price on which will determine the amount that we are going to be paying for these investments. Number 4 is the price for this bond. We have looked at the pricing in terms of the dirty price, which will be the clean price plus the accumulated accrued interest over those 59 days. But to determine the discount, because a bond shall be sold either at par, at a discount, or at a premium, we normally compare the current market interest rate, which is determined by the 364-day Treasury bill, and the coupon rate or the yield of this reopened bond. When you look at this document or this rating by Central Bank, it gives us that the prevailing market interest rate of Treasury, the 364 Treasury bill, is at 16.7999, and the bond pays a coupon rate of 15.039. That gives us a marginal difference of these two bonds, meaning that we shall have a marginal discount which compensates the investor on the opportunity cost of not buying another investment from the market at the prevailing market rates. But that being a marginal difference, a marginal discount, it is mostly likely going to be compensated by the accrued interest that shall be added to the clean price to give us a price that either at par or at a premium of the face values that we shall be investing for this particular bond. So it should not come as a surprise if you are required to pay an amount slightly equal or above your face value. It's because the bond has accumulated a lot of accrued interest, but whatever you are paying as a premium, the accrued interest shall be paid back to you together with all other investors in this bond in February next year, that is 2025, when the next coupon shall be paid. Is the minimum investment. The other important thing to look at for as a detail for this investment is the minimum amount required to invest. You'll be required to put in a minimum of 50,000 for this particular investment. Lastly but not the least, if you are new to this channel or if you are new to bond investments, this channel has a lot of value-packed videos giving you information relating to the bond market, opening of your DAO ZSD account, how to place your bid, payment for those bids, the documents that you require to open a DAO ZSD account, what you are required to have to facilitate your payments, and much more valued information relating to bond investment and other opportunities in the market. Kindly take your time, go through the other videos in the channel. Let's learn and invest. Thank you for watching.